At 9:53, you're watching Live Impact News on your WCNC Charlotte app. Right now, we're talking about finances, your finances, and rising inflation, as well as a record-setting month of May. What does it mean for your money? Joining us here in studio right now is Mark Henry from Alloy Wealth Management. Mark, nice to have you again.
Thanks for having me on.
Of course. So the first half of 2026, strong one for investors. Okay, catch us up on what's been going on Wall Street.
Yeah, it's been pretty crazy on Wall Street. It's in spite of all the chaos, which is really, it's just an odd time. It's a great time to be an investor. And we've seen periods like this before, and I always say, it's a great time until it's not. And by a lot of economists would have told you that we wouldn't be having the kind of year we are.
Yeah.
I mean, think about it. We have a conflict, or whatever we call it this week, in Iran, and we have oil prices that are, just tough and stubborn inflation, and that's driven largely by the oil prices. But we're just under 4% inflation. That's the highest it's been in like 3 years.
Right.
So all these things tell you, the stock market should be doing bad. Well, we had a record May.
Yeah.
Here we go, right?
Exactly. And then sell in May and then go away. Does that advice still hold?
Well, but all that we just talked about tells me, who knows?
Who knows? Yeah.
We all have
kidding.
an opinion, but those opinions have been likely, somebody's always right. So they're saying it's going to do this or it's going to do that. Well, if enough people comment, there'll be one that is correct. But the reality is, who knows? Past performance is not always indicative of future results. We all know that kind of disclaimer. But the reality is, markets aren't working the way we would expect them to. And a lot of that's because we haven't been in a K-shaped economy in quite a while. And that's what we're in right now.
Okay, yeah. So you might as well just roll the roulette wheel.
It's just different.
Okay. So is there anything we should be watching this summer then?
Well, obviously, this conflict in Iran, or whatever you term to call it, I think investors should always keep an eye on that, because if that requires more than it does currently, that's going to change markets. There's no question about it.
Right.
We have to keep an eye on that. Inflation, and then the Fed, the new Fed, what's he going to do?
Right.
High inflation says he has to raise rates. I don't think that's
you told me last night that you think he's going to cut it.
Yeah, that's what we expect
sooner
him
than
to
later.
do. And so we don't know. And that's kind of built in, I think, to markets. But if this inflation continues to go up, I don't know that he has a choice but to raise rates.
Oh, my. All right. So what can we do right now to lower any kind of investment risk?
I think you need to really have a clear idea of your portfolio. When I say a clear idea, it would be, if I'm a 35-year-old and I'm investing one day for retirement, I'd be checking my 401k, my 403, whatever it is I'm putting the money in, and I'd be seeing if I could find some more money to put in the markets. If you have a brokerage account, and you say, why, Mark? Because it could go down. It will go down. It's not that it could, it will go down. But you're in the season of growth right now, and you need to be buying. And if you're buying quality items, when it does go down, keep buying them. And you're dollar cost averaging. That's awesome. If you're a 55-year-old thinking about retirement one day, or 65, or you're in retirement, I would take a very strong look at my portfolio and make sure it's allocated where, if things do go completely upside down this summer, for whatever reason it is, we're prepared for that and we don't lose what we've earned.
So now is the time, as we get into the summer months, about really looking at your mid-year financial portfolio.
No question.
And so this list, so when it comes to goals, depending on the age,
That's right, yeah.
And then talk to us about adjusting your budget.
That spending plan. It's tough right now. That's really what's going on with the K-shaped economy, is this idea that a lot of people are struggling right now, and they're spending as if we're in a recession. So you have a big part of the world, America, that is spending as though we're actually in a recession. They're trying to find ways to cut back. They're trying to bring more income in, and their spending plan, other words, budget, is really tight right now. So we have to still always look at that and say, okay, we're 5 months in, call it mid-year. June is the 6th month. So we're mid-year. Are we on target to hit the goals that we wanted, or do we need to make more cuts and stuff? Then you have another part of the situation that is dealing with it completely different. That's the wealthiest of Americans, and they're spending like we're not in a recession, and that's what is called the K-shaped economy. So again, things are completely different on that side. They're enjoying the success of the markets and other things and spending it if it's the roaring 20s and we're in great times right now.
Must be nice.
Right, and that's the difference right now, is it's just really two polar opposites.
Yeah, okay. Either way you are on the K,
Yeah.
you still need an emergency fund, though.
Everybody does, and that doesn't matter where you're at. That's just good principles for finance. So again, if your goal was to save X number of dollars this year, where are you at? We're almost halfway through. What's the deal? Where are you at? If we're not hitting our goals, why? What we don't want to do is be back in here in December going, why didn't we end up where we wanted to be?
Right. Okay.
So it's time to reevaluate. Summertime is a great time. The spring cleaning's over, but now it's time to say, okay, summer's coming. What are we doing? Are we ready for summer vacation? Have we budgeted for that? Or has the budget been so tight that we're going to put it on credit cards? Bad idea. Let's not do that.
So tempting.
Right. It is tempting. And we want to have fun, but maybe we have to change what we're going to do this summer. It can still be fun. Maybe it's the lake trip, just camping on the lake or something, and we completely change it to make it cost less if that's what we need to do.
All right, so we're sort of mixing in your mid-year review with a strong Wall Street and an investment outlook, Mark. So, what not everyone is looking at their portfolio.
That's right.
But they should be as well,
No
in addition to
question.
this, right? Talk to us about the investment outlook then.
Well, when I think about it, again, age-based, but it is a great time. We have had so much fun, and it's such a good time to be in the markets. But that will not last forever. So again, age-based. If we're in our savings years, it's okay. Keep saving. Don't be worried about the what ifs. If you're heading out of your savings years and into what I call the distribution years, where you're actually going to retire and need this money, it's probably time to take some money out of the market and take your profits, take your gains. Let's at least get them in a place so we're not riding the Wall Street roller coaster. If you've had a big 12 months, a big year so far this year, what would be wrong with going back to where you started the year? Or maybe going back to where you were 2 years ago? And saying, you know what, let's pull all this out and look at CD rates or bank savings or some other form of investment that won't require us to lose money if the markets do change. Or not if they do, when they do.
When they change.
When they change.
This K-shaped economy, what do you foresee then as we move through this second half of the year?
I honestly, it's just tough. There's so many experts that are telling us what's going to happen, and I honestly think it's almost like flying an airplane by the seat of your pants.
Oh, boy.
I think we have to see what the weather looks like.
Yeah.
There's so many variables right now. Is the Fed going to cut rates, or is he going to raise them? Is inflation going to go back down? Is this oil prices going to come back? Or are we going to go to a full-blown war with Iran?
Right.
There's so many variables that could upset the apple cart that I don't know how to predict that, honestly.
But the strategies remain the same.
They're the same.
So, okay.
Absolutely. You're young, go after it.
All right, you got to understand that timeline.
Right. You're not young, you're getting older, or you're getting closer to needing the money. I spoke with someone recently. Children's going to go off to college next year. They've still got it invested because they're making so much. Whoa, what a tough idea. You've made your growth, but we're going to hang around to the last minute and then see the market fall 20 or 30%, and now the money you saved for college is way down, and you have to start spending it to get the child to college? Might be time to reevaluate. Use that kind of simple math.
Okay. I'm thinking about this and letting it sit and
Yeah.
then, for anyone, and I'm sure there are people that are overwhelmed by the unpredictability of the economy, of the market, of where we are in the world and here. How do they start? Where do they start?
Yeah, it's a lot. You got to get rid of the overwhelming feeling. You have to learn to control the controllables. If you've had a good year and you're in your 60s or 70s or beyond, then maybe it's time to reevaluate. You certainly want to keep money in Wall Street and you want to continue to beat inflation with those nice returns, but you don't want to see it all disappear right before you need it. On the other side of that, you're young and you're in your savings years, it's fine. Just keep going after it. You're not at the savings point yet. You're saying, Mark, I don't even have enough to save yet. Then let's get to where we can. Let's look at that budget, that spending plan once again. Let's cut out the unnecessary stuff. Let's find ways to increase the income, and let's make sure we have an emergency fund. And get rid of the chaos. Listen, the world's going to do what it does. We don't get to control that. We control how we respond. So we can't let it, we have to be proactive. Let's not wait and be reactive. Oh my gosh, it fell 20%. Now I need to go rebalance my account. That was too late. Let's be not reactive, let's be proactive.
Proactive. All right. I like that message as we check in with Mark Henry on this 3rd of June, right at the halfway point pretty much for the year. All right. Thanks, Mark. Appreciate the
Thanks for having me
convo
on.
as always. And we'll be right back here on Live Impact News.